Whoa! Welcome to Weenie's weekly market update. And we got short hair Greg today. I got a haircut today. I was trying to get my fingerprints done. Do you know that they don't allow walk-ins for fingerprints, but they do allow walk-ins if you want to get drug tested or anything like that? A little bit weird to me, but either way, in this video, I have a market update. I'm going to talk about what the market did this past week, what the market is potentially going to do into the future, and then just a few trading tips along the way. It's going to be the typical Weenie's weekly market update, but just a little bit more advanced because we got our regular crew here tonight. So it was a market sell-off and it's spooky season. If we look at the SPY, or I guess ES is on our right. Let's just change it to SPY for now. SPY is the ETF that tracks the S&P 500 and /ES is the futures that tracks the S&P 500. And basically, we've just been getting clapped. Ever since the CPI right over there, that's CPI, massive down day. That was an absolutely crazy time. I was in Florida, big drop, and the drop just continued. Then if you guys watched Weenie's weekly market update last week, we were saying, hey, 1 to 2 day bounce. It's kind of awkward. And we did like a little bit of a megaphone type of pattern, which is a very tricky pattern where we make higher highs and lower lows. So megaphone's a little bit tricky, but if you can identify them quickly, you can profit off of them. Then we got Jerome over here just raising rates as expected, right? As expected, no surprises there. It was just the market just needed to continue to sell off and it's draining liquidity. And there are a lot of other events that are going on. So basically we have the CPI report right over here. Then we have the FOMC where we sold off, ripped up, sold off again. And we've been just selling off continuously ever since then. And there's a lot of crazy things going on. We got the dollar going crazy. UUP, I guess you can trade UUP. Let's do dollar sign DXY for the dollar. This is absolutely going insane. So if you're in America, your dollar is getting more valuable, which is good. But also there's a lot of implications that come with that. The British pound took a huge hit. The euro is dropping. So you can kind of go over to Europe and live like a king. And even if you were at the Weenie Trades live stream, you could see YCS going off today. And this was in the pre-market prep. We were gapping up and we were pushing higher. And I didn't trade YCS today. I was, trading futures, doing other things, other shenanigans. But YCS, a nice steady uptrend. And this goes up when the yen goes down. So there's a lot of risk with currencies right now. There's a lot of manipulation. There could be some big drops, some big pops, but YCS, look for this to probably go sideways for a bit. And I might take a small trade on it to look for some upside on a breakout on YCS. The option chain is actually pretty decent on YCS if we check it out. It's not the most liquid, but it's not terrible. Like, look at this. 65 strike call for October 21st. Pay 185 bucks. And if there's a huge breakout, you get paid quite a bit as YCS explodes through the highs. If not though, hey, guess what? You keep the risk in the premium. I was taking some long trades with Club Romulus, back when YCS was back over here. Nice, good move to the upside. So lots of interesting things going on in currency land, and that's kind of creating this weird instability with the market. Again, we're really oversold from these highs back over here, down 15, 16%. Oh my goodness. And now the question becomes, do the lows hold? And they'll probably hold short term. We'll talk about that in a bit. So short term, I'm expecting the lows to hold, especially since we are pushing up in the futures market after hours, about 0.5%. We had a whipsaw type of a close. I was coming back from the pool and look at this. Breakout, snap back in, crazy, crazy reversal. And this has been happening quite a bit. There's some crazy moves over here. Actually, I tried to buy the dip right over here via a put credit spread on the S&P. And that just means, hey, I make money if the market goes sideways or higher from that point, but I lose money if the market tanks from that point. And right at the close, it just whipsawed down. And today I actually closed that for a loss today. And actually, it's only the second loss for Weenie Trades trade alerts in September. So 53% loss. I managed it as best as I could. I did cut before the bigger drop today. So I'm always looking to, make the best decision possible. And again, I always think a trader should be valued on, or I guess judged on, how well do they manage things when they're losing money or when a position is against them. When you're making money, it's awesome. You know, you just choose whether you want to hold, take profits, add, take a little bit of profits. There's a lot of things that you can do when you're up on a trade, but when you're down on a trade, at what point do you cut? Do you add before you cut? These are some of the difficult things that we need to ask ourselves when we're trading. So just be mindful of how you're trading. And a lot of people have been saying, oh, those day traders, it's so risky. You know, those traders, they're just gamblers. And, you know, technically, yes, all traders are gamblers, but I'd say that we're professional gamblers, in my opinion. So you know the probabilities, you know the risk to reward, you know your edge, you know what makes you money. And arguably, in my opinion, if you're a long-term investor, you're also a gambler. I mean, you're just trading on a longer-term time frame, in my opinion. Just because everybody else buys and holds and calls it not gambling doesn't make it any less gambling than scalp trading. Scalp trading might be a little bit more gambling, but you get my point. Trading is trading. If you're involved in the markets, you're speculating who's going to win. So always think of the market as a tug of war. You know, you got the tug of war. This is the rope. And you got that little flag in the middle. Let's pretend that little triangle is the flag. Think of Squid Games or something like that. You got your guys over here. You got the buyers and you got the sellers. And which side do you think is going to win? And that's kind of what the price is going to be. This is the flag, the rope in the middle. I don't know. I'm no tug of war expert. But if you think of tug of war, if you are just investing in the market, you are on the buyer side of the rope. You're expecting that the buyers are going to win and they're going to pull the sellers down forever and ever and ever. Otherwise, if you're a contrarian, most people don't know how to short the market or profit as the market drops. In my opinion, that's being a contrarian, and you are profiting when the tug of war is going for the bears. The battle's going for the bears on that front. And if we just, take a look at the monthly time frame, this is getting dangerous because I think the Federal Reserve just screwed up their policies, meaning they did too much quantitative easing during the panorama crash. And we got a V-shot recovery. We could have just had a nice, stable, slow recovery. And I think things would have been a lot better. But, who knows? I can't speculate what's going to happen or what has happened. We just need to think about what's going to be happening next. So just some quick daily chart patterns that I wanted to note. Again, patterns are not everything, but the story behind the pattern is what makes it so powerful. So we have a head and shoulders pattern on the SPY daily chart. We got a left shoulder, head, right shoulder, arguably two right shoulders. we got a hunchback growth right shoulder over here, but you can argue that was the neckline. Boom, we flushed the neckline. Neckline is still resistance. So, and the whole point of the head and shoulders pattern is that it's a loss of momentum pattern, just as an inverse head and shoulders is a breakout setup. And yes, I know you're laughing at my drawings. That's an inverse head and shoulders, YouTube. Nothing else. I know this is Weenie Trades, but it's just a head and shoulders pattern. So this is a rounded bottom on an inverse head and shoulders, but a regular head and shoulders, just a loss of momentum. And we can even look at some other, patterns in terms of the smaller term time frame. Just last Monday, we had a nice, good equilibrium. So look at this. Nice, good impulse wave up, a small pullback. Okay, now once you start to see the curl, there's some buy setups right there, but really we've made a low, high, low, lower, high, higher, low. Go watch my equilibriums video. We're starting to tighten up. You get an increase in volume. Boom, you can buy that breakout. And again, I would just take it as a day trade because in this bear market, the gaps have been crazy. Like as in some days we're gapping up, but so far, look at this, gap down, gap down, gap down. Push up at the end of the day, gap down. So the gaps have been crazy. Most of them have been to the downside, but I'm wondering if we're going to potentially get a gap up soon if we can stabilize just a bit. So in terms of SPY key levels, since we got so close to 372, that was the number that I was looking for today, just a spike of Friday's high up to that 372 area. But since we didn't get that high, we might go higher than that if we take out today's high. So above today's high, you're getting a hint that we're going to potentially break today's high if we come above 367.20. So 367.20. If we get above that and hold it as support, we're probably going to take out today's high, And we may go up to that 372, but now I think we could go a little bit higher up to this like 373.85 level. So that's going to be kind of like the target on the upside, 373 like 50 area. So that's just the underbelly of this consolidation. So the low of not Friday, but Thursday. If it can get above that, the utmost I think this bounce can go, so the most I think this bounce can go is somewhere around 380. So you could sell a lot of 380 calls. Again, none of this is financial advice, but most of the time I think all 380 calls will be expiring worthless for a ton of expiration. So a potential trade setup, not financial advice, of course. You can watch me trade live at Weenie Trades Live. I'm not saying that I've been trading the market perfectly. I did do very well on the drop. But then after FOMC, I took profits on some of the last of the shorts. And actually today I took profits on Apple short. But nonetheless, I did try to buy the dip on Friday, Thursday, Friday, and today, and just have had like medium red days all 3 days. So I'm kind of on a 3-day red streak trying to buy the dip because I had recency bias. I was remembering this rally and how strong it was. And I was thinking, man, I can't wait till I get a nice, good oversold move to buy the dip on. And I might just be trying to buy the dip at extreme panic fear. But to me, I don't have really too many emotions in trading. I just take a trade, set the stop hits. Okay, what can I learn from it? Move on. Sometimes there is nothing to learn. The trade just didn't work out. Some algos wanted to whipsaw something. There's a lot of whipsaws on the smaller time frames. But as you go towards those larger time frames, it becomes just a little bit more clear. So those are the upside key levels. Of course, we're flirting with the lows. If we do make a lower low first, I would expect that it would be pretty shallow. If we check the SPY expected move, SPY, going into Wednesday, we have, no way, okay. Wednesday, we have an $8 expected move. So that's pretty high. So in my opinion, options are just a little bit expensive for SPY, meaning if you're buying calls or buying puts, oh, hey, Bryce, how's it going? Bryce is in her outfit. She was trying out some outfits over here. She's got Peter with us. How's it going? Hello. Hi, Peter. Hi, Bryce.
Hello.
You guys hanging out? Throw Peter on my shoulders.
Go on the shoulder.
Oh, yeah.
Peter.
I put up my hood so he doesn't scratch my head. How's it going, Peter? I was basically giving them the expected moves for SPY, Bryce, and potential areas of support. Can you believe that the expected move is $8? Do you think that's too high or too low, Bryce?
For SPY?
For SPY. $8 by Wednesday. Can you believe that?
High.
Too high? Yeah, so what do you do if the expected move is too high? What do you do with options? Do you buy them or do you sell them? What do you do?
Sell them?
Yes. When you think implied volatility is too high and you think that the market will stay within a range, that's when you want to be doing those credit spreads. If you think that the expected move is too small, then you want to be buying those options because then if SPY was only pricing in like a $1 move, it would be a no-brainer to just do like a strangle because you know that SPY is probably going to rip up or rip down because, there's room to 380 on the upside. There's probably room down to like 350 or 340 on the downside, something like that. So if the expected move was only $1, you'd want to buy as many calls and puts as you can because you think SPY is going to move more than that dollar. But if it's $8, way too high. So you guys get the point. Basically, 357, 358 area on the bottom side. So if we do make a lower low, look for something like 357 to potentially be an area of support. Remember, we are extended. So when you're extended through a breakdown, it tends to not get as much follow through. Of course, this is a big weekly breakdown, so it could get some follow through. I wouldn't be trying to buy the dip. I would wait for some sort of other pattern on the SPY. So pretty big SPY analysis today. In terms of the upside, of course, we got that like 371, 372 area as resistance for Wednesday. And as we go into Friday, a whole extra 2 days, the expected move only goes up to 11. But look, if we go into Monday next week, October 3rd, first week of spooky season, spooky month. Get your spooky season merch. I'm wearing my Halloweeny sweatshirt. Also got that sweatshirt on as well. Oh, you get to see a nipple. Wow.
Oh, no.
People are getting everything on this. I can, maybe not. New spooky merch. Bryce, you'll get a
cute.
coupon code, right, for that?
Spooky.
Yeah.
For
Spooky
free
Ween.
shipping.
Spooky Ween. But anyways, if you want to buy calls or buy puts, check out the October 3rd expiration for the SPY. So again, looking for an oversold bounce for a potential like 2 to 3 day rally. That's going to be what? 2 to 4, at least 4 4-hour candles. So I'm expecting 16 hours of upside for the SPY at some point. Otherwise, I'm just chilling in a lot of cash and, just small size of something like FSLR, a strong stock in this market. Look at this. This is barely off from its highs while the market's just pooping. So do you have any extra thoughts, Bryce? This is a pretty good SPY analysis today.
Yeah, I was listening in from
You're
the other
listening in?
room.
Yeah.
I don't have any extra thoughts.
Okay.
I think
Sweet.
you covered it all.
Yeah, I covered it all. There's Parker. He's sleeping. Thanks for tuning in. Enjoy the cat trail. This is for you, Jay.